Welcome back to my Vanguard Portfolio update for my stock and shares ISA and my self-invested personal pension, now for the month of August. I think it's fair to say the last month has been pretty much like the UK weather. That's a washout, not very exciting, a little bit windy, and overall not so good. As always, let's start with a bit of an update in terms of the markets, how they've done at the moment. Checking out the S&P 500 now over in the States, we can see the S&P 500 is down 3.4%, at least at the time of recording this video, which is definitely a big pullback from some of the near all-time highs that we were seeing just 30 days ago. We've seen tech stocks definitely have a little bit of a rally after this losing streak. And again, as I'm recording this video, we'll go into a couple of those in more detail. You can see Palo Alto Networks rallied about 14.5% on some stronger than expected earnings. Nvidia popped 8.3% ahead of their earnings. Now I am recording this before their earnings. I'll be very interested in how they actually do in just a couple of days. Now on a personal note, I say this a lot on this channel, but those hype stocks which get crazily hyped up by the media, by all the different investors, by people on social media, people on YouTube, that kind of makes me want to pull away from a stock completely. I do think things have got a little bit out of hand there, and they are now kind of priced to perfection, as Tesla was just many months ago. I do have an update actually where I talk about the likes of Tesla, I think when it was approaching that kind of $1,200 mark per share, just saying, look, it's priced per perfection, it's priced so those expectations are so high now that unless they can meet them, and there's nothing that's saying they can't, but unless they meet them, the only way is down unless they absolutely smash those expectations. So personally for me, I stay away from all of that stuff. One of the kind of mantras that I always go back to when it comes to kind of hype stocks and bubbles is, yes, you might think that AI and technology remains to be the future, and that's absolutely going to be true. However, when you look back and you think about the 1920s, 1930s onwards, automobiles, cars were the future. But there's a huge sway of companies who went bankrupt and never made it. So just because a certain category, a certain sector is definitely going to be the future, bro, doesn't necessarily mean that every company has to make it. And that's one thing that I've always kind of tried to wrap my head around as we go into this new age. Yes, AI might be the future. Yes, robotics. Yes, automation. Yes, all of these amazing things. Which companies will lead? I can almost guarantee that it won't be the ones who are around either today or that you expect to. And if they do, it will be extremely, extremely rare. Now, just staying on topic of that mini rally that we've just seen, you can actually see now Tesla and Meta climbed 7% and 2.4% respectively, and the S&P 500 tech sector gained 2.26% on Monday. So that's now just yesterday at the time of filming this video. As always, by the time I release this video, I bet things have completely changed. But anyway, what can you do? Now, just jumping from the UK standpoint, the FTSE 100 is down almost 5%, and the FTSE 250 is down 5.6% again as time of filming this video. That is a really, really poor month for UK stocks. And yes, you do need to factor into account dividends that would have been paid from those indexes, but still, that's pretty bad. And in fact, if you have a look at this headline, you can see the FTSE 100 is on track to have its worst run since 2019 at the moment. So not a lot to be excited about so far in the UK economy, that's for sure. And I think if you can take any kind of lesson out of this one, it would be to make sure that you're well diversified with your investing. Although there probably aren't that many people invested just in UK stocks, I'm sure there are out there who only invest in FTSE 100 or FTSE 250 listed stocks. This just shows the kind of danger that you experience with that. And if you do expand it over the long term, the FTSE 100 and the FTSE 250 have performed extremely poorly. And if that's your investing time frame, and if you only restrict yourself to those kind of stocks, then really you're putting yourself, in my opinion, in a huge amount of risk. So just make sure you diversify if you want to invest in the UK. Now, going into a bit more depth as to why the markets actually had a bit of a collapse this month, we can see there's a few different key reasons. One of the biggest ones coming out of China. Now, you might have seen a couple of interesting news pieces. So Evergrande, if you remember them, that name that came up just a few months ago, I think toward the end of last year, actually is filed for US bankruptcy. So that's an interesting one. Again, a big Chinese property developer, lots of different debt out there, and also lots and lots of money on bonds. Now, this is big news because the property sector in China makes up a huge part of the whole GDP over in China. There is a huge kind of push to make sure you own your own home, and you will see different stories about the amount of money that people take out to make sure they can get on the property ladder. It's kind of seen as that real path to wealth and that kind of guaranteed thing that goes up over time, which is a little bit crazy when, of course, at some point that bubble has to burst, or you just take so much debt that you put yourself in massive risk. And you would have seen many stories years and years ago during the global financial crash, especially with these huge ghost cities which just got built and built and built, but no one actually lives in there. Another interesting story you would have seen as well is a company called Country Garden who missed their payments on some corporate bonds recently. The big question is what happens with that at the moment. Does the government step in? There's always going to be a fine balance in China with the huge amount of state control that goes in that sector. Do they pump more money in? Do they let some fail to set an example? And what happens to the rest of the market? But Some huge news coming out of there, which definitely made a few investors a little bit nervous, as we can see moving forward. Now, keeping on the topic of some of the big stocks that did get their bubble burst in a very short space of time, Tesla, as you can see, had a bit of a crazy month, but it has had a couple of two-day rebound, at least as we are filming this video at the moment, up 7% on one day, that's Monday, and up 3% so far as I'm filming this video, but who knows what it's going to be for the rest of the week. Just shows how volatile some individual stocks can be. And then another one of the biggest losers this month is PayPal. That was down nearly 20%, so it's about 17 or 18% down as time is filming this video, which is a really interesting one. This now puts this stock back years and years in terms of where its stock price is. And actually, this was quite a darling stock in terms of the pandemic. It went up massively as people were spending more and more online. But now as more competitors enter the space, there is a race to the bottom of fees. But then, is this an opportunity to buy? Again, some of the issues coming up with this stock is lots of people now are covering the stock on social media, and more people are saying it's a buy just because it's gone down. Just be really, really careful out there. Now, final bit of news just before we head into the portfolio update. You may have seen the potential listing of the chipmaker Arm based here in the UK. Now, at the moment, they were taken private by SoftBank based out of Japan, who have seen many losses from different investments they've invested in over the last few years. Now, they are set to list over in the US anytime soon for quite a significant valuation, which puts them up there. I'll put this up on screen now. It puts them up there as one of the biggest IPOs of recent time. Now, as you may know, it's been pretty quiet on the IPO front. Definitely nothing like we had in 2020 and 2021. So this will set a new precedent, and it'll be very interesting what happens to this stock. There was, as you might remember, just a few months ago and over the last few weeks, talk of this having potential listing here in the UK. But to be honest, as you can imagine, with not much liquidity, not a huge market here in the UK, really all the money is over in the US. So all the excitement is certainly going to go over that direction. Be very interested to see where this one goes. So we'll keep an eye on that one. It is a shame it's not going to be listed here in the UK. It would have put itself up there with some of the big boys already and made the stock market here in the UK a bit interesting because we don't really have any kind of tech stocks listed here in the UK at the moment. Anyway, that wraps up the news in the markets. Let's go straight into my portfolio and see how we've done over the past month. Okay, so now quickly looking into the actual portfolio itself, we can see here now we're at £54,391.14p. Now from memory, I'm pretty sure that's quite a significant drop of what it was last month, just 30 days ago, which is absolutely insane. I will put up on screen now what it is in a dollar amount because I do have some questions often asking me what this converts to from my overseas viewers, so I'll pop that on the screen now for you. I will just combine the two together, the pension and the ISA. There's no need to necessarily go into each one, but you can see the different performance here so far of both of these accounts. Remember, this is an old ISA, which I no longer contribute to at the moment, so I just kind of leave that there and set that. And again, the pension, which is all of my old workplace pensions put together, again, is something I leave and set and forget. Eventually as well, I will, as I get more and more money, hopefully once I max out my ISA, one of the next things I would potentially do is add more money into my pension. But of course, as usual, there's pros and cons. With any money you do add to a pension, it is taxable on the way out, but you do get that 25% bonus to any cash you put in, which is pretty nice, but you can't touch that until you're retired. So lots of things to weigh up there. Personally, in my opinion, I'll try and max out my stock and shares ISAs for the time being. But anyway, that's where we're sat now. So not a huge amount of money in the green. As usual with investing, it's all up and down. Let me jump over now to the investments tab, and we'll just see that performance month to month, just see how things have gone so far. Now, I did have a little peek earlier, so I think we're going to see quite a significant red number here. So as you can see so far, we were pretty green for a few months now, but August has really hit this one hard at minus £2,456. As usual, remember guys, this is just a number on paper and I don't really pay much attention to this. And as I say quite a number of times now on my portfolio updates, the reason I do this is to kind of share that journey as an investor, that you have many ups and many downs in this. And actually, the worth of this and the amount of this really, I don't really pay much attention to it because I don't really have any access to this money other than the ISA. I technically could pull that out, but I have no need for it because everything else in my life is set up to enable me to invest and enable me to put that money in and leave it for a very, very long term. Anything is possible in the short term. Now, unfortunately, I do though think on another note that this is probably one of the most amounts I've lost potentially on paper in a month. Let me have just look a scroll there. You can see toward the end of 2022, that was a pretty horrible month there, over £2,200. Actually, December and November combined is pretty bad. September, again, was also a pretty bad one, but I think August so far has taken the cake. You can see now, as we go back into 2021, 2022, as that kind of bubble burst and things start to get more interesting. But that's just kind of what happens in the stock market and doesn't really bother me necessarily. It just means in my other investing accounts, as I'm dollar cost averaging in, if anything, I get a lower average. And again, as I say many times, you do have to switch your brain around to that thinking that when things are green, although that is nice to look at mentally, it's not really why you do it as a long-term investor. And the ideal scenario for your investment period, if you were starting now or maybe you're just a few years in, is for the next 17 years, for if anything, to have quite a bit of a bear market. Obviously keep your job and keep all your finances in check in your house, but then being able to enjoy the fruits of your labour in many, many years. But now saying that, I realise I do have a big audience who also have retired or are at the end of their journey. Now you do have different things to think about, and at that point you do have kind of less flexibility and less choice, and you do want the market to be strong, but then also you do need to balance things up with more fixed income assets, potentially like bonds, and also holding more cash because you can't take the same sort of level of risk as long-term investors can take. Just taking a look at kind of the longer term performance chart in the account, it's quite interesting to see how it's kind of gone. And as you can see, one of the couple of peaks we had a big peak last summer at 56,950, but didn't actually realize this, I didn't actually take this into account. If we have a look here, just at the start of the month, the account value was at 57,034. So I've reached a new all-time high in this investing account, but now we've taken ourselves all the way back down as we are today, which is quite crazy. But again, just showing you how much can happen in a short space of time. Now this highlights, I think, a couple of interesting things. So just for newer viewers, my portfolio in this account is just a single fund. So I hold the exact same fund in both accounts. That's the FTSE Global All Cap Fund, which is an accumulation version of that fund. All of the dividends get reinvested automatically. This just takes care of itself. No cash goes into the account, and all my fees are just paid by direct debit. So I know that's been coming up a couple of times. How do I pay for my fees? It doesn't come out of my costs here. I just pay it by direct debit. You can actually set that up in your Vanguard account. I think you can add money to the account. You can pay by debit card. I just have a direct debit set up. I think they take out normally every several months. It's not taken out every month from what I realise. I think my fee's probably about £15-16 every 3 months or so, which is fairly good for an account this sort of size on a trusted platform like Vanguard. Now, just quickly on that note about the investment itself, bear in mind that this is a very, very big, large, diverse set of investments, and it just shows how much things can move even in just a month. So those of you who go down the kind of stock picking route and want to have your own investments, which personally I'm not against, I do have my own stocks, I do have a few of my own investments, but the largest portion of my investments is held in index funds and will remain that way. Because if you do want to hold individual stocks, then your level of volatility and your level of variation is going to be massive compared to something like this. If an account like this can go up and down just a few percent in a month and cause swings like that, can you imagine a portfolio of just a few concentrated stocks? So that's always the trade-off and that's always the balance. And you might be laughing and you might say, yeah, that's great, I've got all the best stocks in my portfolio and you do well for a couple of months. But look at what can happen in just a very short space of time. There'll be many people out there who will be massively, massively in the red, wishing that they invested in index funds, but hey. So there's a portfolio update for you there on my Vanguard account. Remember, I do have multiple investing accounts of where I keep different parts of my money. My current latest newest ISA is on the InvestEngine platform. And also don't forget, if you do want to get signed up and start your own investing account, I do have all of the links in the description below where you can get some free shares and some free money to get yourself started, which is always nice when it comes to investing. I'll leave my latest portfolio update on screen now for you, as you can see here. And don't forget, there is a playlist on my channel that goes through all of my portfolio updates, which you can go back to, even some old accounts which I no longer have, like Hargreaves Lansdown and Freetrade. Anyway, thanks so much for watching. Drop me a like on the way out, subscribe for many more, and as always, happy investing.